We're just a few hours away from markets opening for the day in Asia. Let's get to CNBC's Will Caloris live in Sydney with the early setup. Hi, Will.
Hi, Melissa. Yeah, another day of selling is expected for the Asian markets. In particular, if you do look at the Nikkei 225, they were closed yesterday for a holiday, and just the indicative trading shows around about a 3.1% drop is to be expected as they play a little bit of a catch-up from all the selling that we did see across the region yesterday. Obviously, that was highlighted by Hong Kong, that was down by well over 3%, its worst day since July, and it's sitting at the worst levels since October last year. The Evergrande debt crisis obviously playing into that, and also that risk that contagion could spread across the property sector. And I suppose one of the biggest markets to be concerned about when it does come to any kind of China risk is the most exposed, which is, of course, here in Australia. We're setting up basically for our third straight session of losses for the ASX 200. SPI futures indicating right now 1.4% drop, but we've really seen our commodities plays getting absolutely hammered over the course of the last two sessions. If you look at those big iron ore names, the iron ore price yet again dropping by a further 8%. It's well below $100 a tonne because of the fact that if you think about the Chinese real estate sector, 30% of the steel, so that's where we're seeing the pressure, and the Australian markets will be set for a big drop again today, Melissa.
All right, Will, thank you. Will Caloris in Australia for us. Guy Adami, what will you be looking for first thing tomorrow morning?
Yeah, bond market for sure. Tim mentioned the dollar. That's the other thing, clearly. But, you know, so to me, it's the bond market. Today, you obviously saw a flight to quality in the form of buying into TLT and yields going lower. We'll see if that continues. Real quick, though, you know, Chris said something interesting earlier in the show, the fact that the lower Evergrande goes, the more unlikely it will be for the Bank of China to step in. You know, what a unique and refreshing thought that, you know, these central banks will actually allow things to fail. We should actually give that a shot here. It might be refreshing.
There's a degree of irony in that, to think that Communist China's central bank will allow the markets to function as they will function when the U.S. central bank and other central banks actually intervene. That's just an aside, though. Karen, first thing tomorrow morning, what will you look for?
Well, that's a really good comment that you made, though. I mean, that we wouldn't let that happen and that they would. That's kind of ironic. What I'm looking is what happened overnight. I'm sort of hoping that we see, you know, some bad action sort of around the world, and we open down here, and then I'll be looking to buy.
Tim?
I wouldn't do anything till Europe closes, which is, I think, where Karen and Guy are both talking about it. You know, typically you need to see those markets close to see where we begin to price in some strength here. I just think that ultimately investors right here don't have a credit crisis, and you know, there's been all kinds of parallels and analogs we've been hearing about with Evergrande today. Let's see where it goes.